Hey, Sean from Invest to Live. Let's jump right on in. So today we got some earnings news on Bank of America, and not that I'm surprised, but it's a pretty solid beat. So I just want to hit on those numbers real quick here. And just for the record, it's Thursday, the 14th of October. Bank of America released their earnings this morning, where they really did beat estimates by quite a bit on a number of key areas. Strong advisory and asset management results, reserve release information. Here's some of the key pieces of this. Really, revenue was at 22.87 billion versus the estimate, which was 21.8. So almost a full billion over the estimate. Shares at the time of this were up about 2.5%. A nice little bump in the price there as well. And from an earnings per share perspective, earnings were 85 cents a share versus the estimated 71 cents a share from overall analysts that were surveyed by Refinitiv. So this is pretty interesting at a glance because it sort of creates some confusion as far as, well, what is going on with the economy? We're hearing about supply chain issues. We're seeing issues in other areas of the world, but then we see stuff like this. So, it's a pretty big deal. And I'd also call out too that they saw a $624 million boost after charge offs as well. So there's a lot of good things going on here. Now, there's a lot of factors included in this, and there's a lot of reasons why this is the case. But overall, they're seeing strong work against everything here. So their CEO, Brian Moynihan, said specifically during the release that deposit growth was strong. Loan balances had increased for the second consecutive quarter, which has led to an improvement in net interest income, even as interest rates have remained low. So I want to spell that out really simple. What it's saying is, although we're in a very low rate model right now, we're still seeing banks are making a lot of money off of the loans that they have out right now. So the key with this is, although rates are low, they're just creating more of them. So more people are getting those low rate loans, which is generating more. Now, of course, the economist in me says, what does this mean for the people who are borrowing? Whether it's low interest or not, it still means more debt out to the general American public and from the commercial sector as well. But it's a good point to call out. One other key point I want to mention during this as well is net interest income, which is a very strong component for banks to pay attention to. And as investors, we should know this as well. Net interest income jumped 10%. So that's at 11.1 billion. And again, this was originally estimated to be somewhere around 10.6 billion. So again, they're just sort of beating everywhere here. And I think that one of the key things that we're seeing as well is that, this isn't just in the general retail banking, deposits and loans. From a standpoint of investment banking, which I just want to call this out. Investment banking is typically when we deal with things like capital markets, going public, raising money for large companies to grow, etc. So investment banking fees also rose 23% to 2.2 billion. And what they saw was a surge of 65% in advisory fees to an all-time record of 654 million. And so I want to call this out again, that this is another area where analysts were calling for 2 billion in investment banking revenue, and they saw 2.2 billion. So a full 10% bump from that perspective. This is really, really pretty crazy stuff, because what we've been hearing is our general economy is doing well, but people seem to be struggling. We're hearing that there's some issues around growth in different sectors of our business. The other thing that I think is interesting as well is we've been hearing a lot about direct public offerings, or DPOs, and how this is putting a bit of a crimp in these investment banks. Apparently not, right? So one other thing as well, even the bank's trading operations were above expectations for the quarter. So from the standpoint of bonds, the trading revenue did dip down by about 5% to 2 billion, but the estimate was actually 1.93 billion, so still beat there. And then in a really big win, this is just a heck of an earnings report, by the way. In a really big win, equities trading was way up and was surging by 33% to 1.6 billion. This is a full 150 million higher than expected. That's not all. I'll give you one more here because I don't want to go all day on it. It's funny. It just seems like all good news. It's hard to find something here that maybe isn't. The bank's wealth management division, which is another key component of a lot of banks, and they're really, I would say this is a big focus area for a lot of banks to try to bring more wealth management under their flagpole. The wealth management division posted a 17% increase in revenue, driving that new revenue number to 5.3 billion. And they have a record asset management fee of $3.2 billion. These are big numbers. These are big wins. I think that the expectation was we were going to see a pretty strong vision of earnings here, but this is pretty darn strong compared to a lot of folks. So what I would just call out simply is additionally, we're not just seeing this with Bank of America. So we also are seeing this at JP Morgan as well. So they beat expectations. They had a $1.5 billion boost from better than expected loan losses. And even Morgan Stanley as well topped expectations as well, as they had record results in investment banking and asset management too. So I think the key takeaway as we're thinking about all of this is the finance sector is doing pretty darn good. Now, the question is this a barometer for the entire finance sector, or is this just for the largest banks in the US? I don't have a strong answer for that yet. We're going to have to wait and see how some of the super regionals and regional banks are doing. But overall, from the standpoint of large-scale banking, this is definitely a good sign. Now, from a standpoint of how I think about this and how I sometimes will play something like this, what I do also want to call out is sometimes there can be a lot of good information from these large banks, how they're performing, what we're seeing coming out from that perspective. And I will look for plays in more mid-sized banks, smaller banks, regional players, etc. Now, I will say I like to proceed with a lot of caution in that space because things can be very unexpected. It can be regional areas of downturns where things aren't as strong. But if you're looking for areas to potentially invest in, I would say do your research and see what other banks have similar operations, have had similar earnings in the past, and tend to follow the correlation of these bigger banks. I'd also find out who's partnering with these banks, how you could possibly get into some secondary or tertiary plays here as well. So with that, we'll keep it short. The big news for today, Bank of America absolutely crushed earnings across the board. JP Morgan and Morgan Stanley also had better than expected earnings as well. So pretty solid week so far for the finance sector. With that, have a good rest of the day. Good investing, good trading out there.